This is an earnings week preview. We're going to look at the major companies announcing earnings this week. And we're going to look at the estimates versus a year ago. And we will try and project how these names will move and what is the most important aspect of their earnings. On Monday, PepsiCo will announce earnings. Tuesday, July 14th, it will be a big day for the banks, JP Morgan, Wells Fargo, Citi, in addition to Delta Airlines. As far as Wednesday the 15th, we have Goldman Sachs and United Health. And finally, Thursday the 16th, we have a bunch of earnings. Some we're not going to look into in details, and some I will. We have Domino's Pizza, Bank of America, Morgan Stanley, Abbott, and we also have Johnson & Johnson. We have Taiwan Manufacturing, the semiconductor company, and of course the big one, Netflix. As far as the earnings on Thursday, we're not going to look at Domino's Pizza. We know Domino's Pizza is accelerating during the coronavirus lockdown. It's not really market moving information. Bank of America, we're going to talk about the banks reporting on Tuesday 14th, so the same narrative will apply there. We're not going to discuss Bank of America in details. So is Morgan Stanley, because we're going to look at Goldman Sachs instead. Abbott and Johnson & Johnson. It'll be interesting to see their numbers, but again, there's no market moving value to their numbers. Of course, Abbott is almost at all-times high, so any disappointment there will be moving for the stock itself, but not a market mover. So I will limit the coverage for Thursday the 16th on Taiwan and Netflix, because these two are really important indicators for the semiconductor sector and for the technology sector. So we're going to look at these in details. Before I start, I want to warn you that do not buy naked calls and naked puts during earnings week expecting the stock to go one way or the other. That is just gambling. Buying a naked put, a naked call is gambling, and it's really, really financially stupid because you're overpaying for the options. The people who wrote the options for earnings week calculated the implied volatility and priced the options in a way that the odds are in their favor to collect your money and that you'll never make money on your purchases. So please don't buy naked puts, naked calls. That is just gambling. I want you to watch my video, which I will release pre-market, giving you a guideline in how to trade earnings week. I will show you intelligent ways to trade earnings week that minimizes the risk and increases your chance of making money. The other thing to note is earnings misses and earnings beats mean nothing at all. It's a bunch of analysts who got into the room and they're all in cahoots with the companies and they decide a number, an estimate. And the companies, of course, work with their accountants to beat that number as much as they can, and they come out and say, oh, the company beat or missed, yet the stock behaves in a different manner. We've seen this before when a company beats, yet the stock crashes, and a company that misses and the stock rallies. The reason is that beats or misses are not important. What is important is what is already priced in the stock versus what the earnings are projecting. If the earnings confirm the movement in the stock and actually say, hey, the stock is actually undervaluing the real picture, you see the stock rallies. If the earnings, on the other hand, come disappointing and tells you, hey, the movement in the stock is unwarranted, then the stock corrects and drops. That's it. So let's take a look at PepsiCo. PepsiCo is very important because it is a parameter for the global economy. Is there a global slowdown in consumerism? PepsiCo will tell us that. PepsiCo relies on global revenue for its overall picture. The estimate here is 1.26. A year ago, the estimate was 1.5. 54, so they're lowering their estimates. So they're factoring the fact that PepsiCo will slow down just a little bit. Whether PepsiCo is slowing down more, that would be a different story, but it will tell an overall story about the health of the global economy. This is a company that sells products to a lot of restaurants and dining facilities. These are closed, not just in the United States, but globally, and slowed down. The business slowed down there significantly. How would that factor into PepsiCo's earnings? On the other hand, with the lockdown and people staying at home, are people going to the grocery store buying snacks and other PepsiCo products? In that increase will balance off the decrease from the restaurants and dining facilities. We will see. The revenues estimate is 15.34 billion. A year ago that estimate was a year ago the actual number for the revenue for the same quarter was 16.45 billion. So a slight decrease here by the analysts, the estimates. We'll see if the decrease is more or less. PepsiCo's earnings are very important. Tuesday, the 14th, big day for the banks. JP Morgan, Wells Fargo, Citi, of course, all eyes on Wells Fargo. That is the name to watch. Wells Fargo is the weakest bank in America. It's been engaging in very risky loans and risky behavior. We know from the Fed's stress test that they told the banks to stop hiking their dividends, but they also told Wells Fargo to decrease their dividends. Is there a trouble there brewing in Wells Fargo? Well, we don't know because the Fed has a secrecy there. The Fed did not release the stress test detailed information about the individual banks. They're keeping something secret. Well, the earnings here in Wells Fargo gonna uncover what that secret is. Is Wells Fargo in trouble? If we see a bomb from Wells Fargo on Tuesday, that will take all banks down, regardless if JP Morgan or Citi or any other bank reports good earnings. If Wells Fargo has a bomb brewing, then the entire banking sector will go down. Wells Fargo is the one to watch here. Here are the details of the bank's earnings. Now remember one thing. They're actually projecting that the revenues for banks, at least for Morgan and Citi, will be better than a year ago. How did they reach that conclusion? I think because they're factoring in the PPP loans. Remember, the PPP loan scam where everybody went out and looted the treasury and took taxpayers' money, banks also scored from that money. You know why? Because they're charging processing fees. They're charging us to process our own taxpayer money to get it back. And they scored billions of dollars from doing that. It is criminal, but it is what they did, and that could be an offset to whatever losses they have. So that's the only explanation I can find for the analysts' estimates that banks' revenues will be better than a year ago. Let's take a look at the individual banks. JP Morgan, the earnings estimate is 1.19. A year ago, the earnings were 2.82, a little bit of decline there, almost by half. The revenue estimate is 30.3 billion versus 29.57 billion a year ago. So a slight increase. I just told you why. Citibank, the earnings estimate is 0.36 versus the number from a year ago, 1.95. Big decrease here for the earnings in Citi. At least that's what the analysts are projecting. And as far as the revenue numbers, the estimate is for 19.11 billion versus an actual number from a year ago, same quarter, for 18.76 billion. Here is the one to watch, Wells Fargo. The analyst estimates for the earnings is minus 0.10 versus 1.3 a year ago for the same quarter. Big, massive decrease. The revenue estimate is 18.34 billion versus 21.6 billion a year ago. The actual number from a year ago. Of course, Wells Fargo is the only bank that is not getting a bump in revenue in the analyst estimates versus a year ago. It shows you the weakness in Wells Fargo. We have seen numbers of delinquencies. The number of delinquencies in mortgages and credit card payments are slightly increasing. How would that affect the bank revenues? The analysts are saying not so much. The analysts are actually expecting positive revenues. I reiterate that as Wells Fargo goes, so will the entire banking sector. If Wells surprise to the upside, you'll see all the banks shooting in the green 5+%. If not, if Wells Fargo is a big bomb brewing, you're going to see the banks dropping heavily as well. We also have Delta Airlines. This is very important actually. And this will report before the market opens, by the way. The analysts' estimates for earnings is minus 4.31 versus the actual number from a year ago for the same quarter, 2.35. Massive, big drop that the analysts are estimating here. The revenues, 1.35 billion versus the actual number for the same quarter a year ago, 12.5 billion. Big drop, minus 89% in lost revenue. Here's the thing that I want you to pay attention to. The TSA checkpoint numbers increased slightly during the second quarter of this year. So when you compare the checkpoint numbers from the TSA versus a year ago, you'll see the decrease is between 70% to 80%. So the fact that they're estimating that Delta Airlines revenues will decrease by about 90% maybe is a slight exaggeration here. So it could be that the revenue number will come a little better than expected and Delta Airlines will actually rally. So will the entire airlines industry and airline stock. It could be, I'm just saying that the analysts' estimates are so dark that are so easy to beat at this point. However, we've seen from the data from United Airlines that yes, in the second quarter, the number of trips and travelers increased, but then it took a turn to the downside as the country started to shut down again and COVID-19 numbers started to rise again. So if we see a pop in Delta Airlines, that would be an opportunity to sell and take some profits or reduce your losses. It also would be an opportunity to short the rip because the number that they're going to put in the next quarter will be a lot worse than this quarter. At least this is how the numbers are projecting. All right, let's segue to Wednesday the 15th. We have Goldman Sachs and United Health. This is all before market, of course. The earnings estimate for Goldman Sachs is 3.9 versus an actual number from a year ago of 5.81. The revenue estimate is 9.6 billion versus 9.5 billion last year. So slight increase in revenue, but earnings going down. The explanation here could be because of trading activities, the surge in trading and selling and buying, that could actually add up to the revenues of Goldman Sachs. But the costs of the shutdown and lost businesses and all of that, that could be a pressure on their earnings. I think Goldman rallied over 50% from the lows. So it is really a judgment day. Goldman also was one of the weakest names in the Fed's test. And Goldman remains with Wells Fargo as very concerning. So it's really important to see here what Goldman Sachs is going to show. I don't think they will beat in revenue. I think the trading activities and all of that is just a fraction, a small fraction in Goldman Sachs revenue. However, the big chunk of the revenues is in business loans, and we know the delinquencies and the fact that a lot of businesses are not paying their loans. They stop paying mortgages, they stop paying rents, they stop paying loans. We're going to see a lot of bankruptcies and a lot of delinquencies. I think that would put a lot of pressure on Goldman Sachs, but we will see. Goldman is one of those names, if you listen to the business news networks, they never say anything bad about Goldman. Every time there's a discussion about Goldman, it's always positive. They never say anything bad or a recommendation of sell against Goldman because all of them are ex-Goldman Sachs employees, graduates, and they're going to say good stuff about their alma mater. Then we have United Health. United Health is a good parameter to see how the health insurance industry will withstand the coronavirus crisis. We know that the government and health insurance companies pretty much took the shot for the corona or COVID-19 treatment bills. However, we're seeing a lot of patients who get out of the hospital and now they have an additional bill, exuberant bills of hospital fees that they can't afford to pay, and the insurance won't pay either. So that is a burden on the customer. Would that factor in any ways in terms of a burden on the health insurance companies that they're paying more because the fees are really exuberant? We talked about the remdesivir treatment costing $3,000. I don't know how much the insurance will cover from that, but these are all very, very expensive treatments, very expensive hospital fees that the insurance will have to pick up some of the amount on the tab. Add to that the unemployment numbers and the lost number of jobs where employers are not paying for health insurance anymore. Would that factor in again? Because the analysts here are actually projecting that United Health numbers will go up. They're projecting that their earnings are going to be 5.18 versus 3.6 a year ago, and their revenues will be 63.5 billion versus 60.6 billion a year ago. So I see a little bit of a risk here that the analysts are expecting this company will grow in the coronavirus crisis. Meanwhile, the unemployment numbers and lost revenue in businesses and the businesses that are declaring bankruptcy and shutting down, how would that factor in the insurance industry? That should be factoring in as lost revenue, but we'll see. We'll see how that materializes. Now to Thursday, the 16th, the most important day of the week, we have Taiwan Manufacturing. If you watch my bit after Micron's earning, I said that the semiconductor industry will see an increase in revenue because of low pricing. Companies are stocking up on chips and memories right now to take advantage of lower pricing. However, consumer purchasing power is weakening worldwide, globally, meaning that all these companies that are buying chips and buying memory to manufacture the goods, they will not be able to sell as much as they anticipate. So you will see a slowdown in purchases from the businesses buying chips and memories from the semiconductor manufacturers and designers. So I argued that this quarter would be a peak of semiconductor earnings. We will see because the analysts are expecting an increase, just as I do, for Taiwan Semiconductor Manufacturing. Remember, this is the company that manufactures the majority of semiconductors. NVIDIA, Intel, etc. are all designers. They designed the chips, but Taiwan manufactures them. The estimate for the earnings is 0.71 versus 0.41 a year ago. The revenue estimate is 10.35 billion versus 7.75 billion a year ago. Again, this is factoring in the surge of buying because of low pricing. But the real number here to watch for the semiconductor industry is the guidance. Okay, are they going to guide up or down? That's the most important thing, to realize whether this is a peak or not. And now to the big kahuna, Netflix. Netflix is the one that will move the market and the most important stock to watch. Netflix has a history of popping after earnings up or selling off severely to the downside. And then the next day that move is pretty much erased. Netflix has that tendency. It pops, and investors get excited, and the next day it actually pre-market sells off and it opens flat. Very interesting behavior for Netflix stock the last couple of quarters. Of course, the argument for Netflix is it is benefiting from the stay-at-home culture due to the coronavirus crisis, and it's picking up more subscribers, it's picking up more revenue, and the numbers are getting really good, and that's why investors piled into the stock and pushed it way, way, way over its head. It is up 8% on Friday alone. That's the craziness in the stock. And that's the risk. Is the stock pricing a story that is really positive? Because at this point, even if Netflix beats all the numbers, revenues, earnings, subscribers, the stock is pricing something really positive that is not attainable by any realistic means. So we will see how Netflix earns, how Netflix earnings would be. They have to surprise massively to the upside to justify the stock moves. The earnings estimate number is 1.82 versus 0.6 a year ago, so the earnings will increase. That is very logical, actually, because Netflix is not producing any content anymore because of the shutdowns, so their earnings number will increase. So be careful here of the twist that you're going to hear from Netflix and the media. They're going to put it as, oh my God, Netflix beats earnings and it's such an amazing number. But the only thing is that they stopped producing. So there is no cost of goods sold here. Of course, that number will pick up as soon as they restart producing again. Their cost will increase significantly. So don't be seduced by that number in that story. The revenue estimate here is $6 billion versus $5 billion a year ago for the same quarter. Netflix doesn't move because of revenues and earnings. Netflix moves because of the subscriber number, the increase or the decrease in subscribers. Netflix being very conservative, saying that, hey, we're going to have 7.5 million new subscribers. Goldman Sachs disagrees. They think that Netflix is being too conservative, and the real number for subscribers would be 12.5 million new accounts. So the analysts, unlike last quarter, are actually projecting an increase above Netflix's own number. This is the key for the disappointment. Pay attention. That the analysts are projecting that the 7.5 million that Netflix put out is conservative. That's the risk right there. But the real judgment is last quarter, Netflix reported 15.8 million new accounts. The key, how many of these accounts did they retain? Were they just an increase by people using the free trial period? What about the slowdown in the global economy? South America, Middle East, Asia. These regions are being hit very hard, and these regions are the key for the growth in Netflix numbers and Netflix subscribers. Factor in that the dollar value also increased. So how would that factor into their global earnings? It will lower them. So we have to pay attention to these factors. I think that Netflix will be a disappointment. However, the stock moves will depend on what the stock will do on Monday, Tuesday, and Wednesday. Are they going to start to do profit taking on Monday, Tuesday, and Wednesday and drop the stock lower by, say, 5%, 8%, 10%? Then that would increase the likelihood that the stock will have a little pop after earnings. But if the stocks remain steady and gains, actually, if it gains more percentages, that increases the risk to the downside on Thursday when Netflix finally reports. And of course, like I said before, I'm not covering Bank of America and Morgan Stanley because we covered the banks and Goldman Sachs before, but keep in mind that this would happen too. Say the banks disappoint on Tuesday and they drop altogether. Bank of America will go down too. However, that would mean that any number the Bank of America will release on Thursday, it will trade in the green because it's already lost a lot during the reporting on Tuesday. So that's how stocks work during earnings. It's just a psychology because they all trade under ETFs. So they drop together and then the individual name reports and it pops in the green because the drop was not justified on Tuesday. That's the hypothetical, of course, but I'm just telling you how things work here. If the banks drop or they pop and Bank of America pops too, and then Bank of America reports slightly disappointing numbers, it will go down in the red heavily. Same thing with Morgan Stanley. If Goldman Sachs drops, Morgan Stanley would drop too, and then it reports its number, and if it's slightly better than expected, Morgan Stanley will have a big green day, and the opposite is correct in case of Goldman Sachs shoots to the green after its earnings. So will Morgan Stanley. Then Morgan releases their earnings, and even if they're slightly better than expected, the move already happened after Goldman Sachs, so you'll see the stock sells off. That's just basic stock earnings week psychology. So that's all what I got for you for this video. Please watch my video that I will release pre-market tomorrow. It's very important to teach you how to play earnings week. What kind of trades do you have to construct intelligently to make money and lower your risk in trading earnings week? That's a very important video. It's going to be released pre-market tomorrow. All right. Thank you so much for watching.